Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another income idea. But before we go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Investing comes with risk. No matter how safe an investment sounds, there are risks involved. To read more about it, please see the description below. If you like what you see in these videos, you could also read all about it on a regular basis on www.incomeinvestors.com. And there you could also sign up for free reports that get sent directly to your inbox. When it comes to investing, it's always a good idea to find best performing sectors and strike while the fire is hot. And right now, coal and today's income pick, SunCoke Energy Inc. are searing. Just a few years ago, this wasn't the hottest sector in town. In 2020, for example, coal was selling at about $50 per ton. By September of 2022, it has soared to more than $430 per ton. Today, coal has settled at around $150 per ton. SunCoke Energy Stock, meanwhile, has been trending steadily higher since bottoming in early 2020. And thanks to record global consumption and strong demand for coking coal, the outlook for SunCoke stock remains excellent. John?
Thanks, Mo. You're right. You're right. Coking coal is a key component in the production of primary steel, which is crucial to infrastructure and the energy transition. And surging global steel demand has put the spotlight back on coking coal as the global economy recovers from the pandemic. Global steel output is expected to increase by roughly 22% from 1.8 billion tons in 2022 to 2.2 billion tons by 2050. The demand for coking coal is expected to rise at an even brisker pace. That's because metallurgical coal is essential, as we noted, for the production of steel. This makes it one of the most widely used and in-demand building materials. As its name suggests, coking coal is converted into coke, the key source of carbon that is essential for converting iron ore into steel. And it takes a lot of coking coal to make steel. For example, it takes roughly 770 kilograms or 1,700 pounds of metallurgical coal to make 1 ton of steel.
What can you tell us about SunCoke Energy Inc., about their business and what's happening?
SunCoke Energy Inc. is an independent producer of coke in the Americas and Brazil, in addition to its U.S. facilities in Illinois, Indiana, Ohio, and Virginia. It has an international operations in Brazil. The company operates through 3 segments: domestic coke, Brazil coke, and logistics. As noted, an essential ingredient in the blast furnace production of steel, SunCoke has 5.9 million tons of annual coke making capacity, and it has a pretty big North American footprint. Its 4.2 million tons of U.S. capacity represents about 25% of the entire U.S. and Canadian markets. While the coal industry can be unpredictable, SunCoke's long-term take-or-pay contracts, in which it receives a fixed fee per ton of coke produced, also contains provisions for pass-through of coal, operating, and transportation costs. And then this insulates it from commodity price volatility. Through its logistics segment, SunCoke's domestic and export terminals serve coal producers and end users in the steel, coke, and power industries. Meanwhile, its domestic terminals serve key U.S. ports in the Gulf Coast, East Coast, and Great Lake regions. They have a collective capacity to mix and transload more than 25 million tons annually. Export terminals, Convent Marine Terminal is one of the largest on the U.S. Gulf Coast, and it's the only terminal in the lower Mississippi with direct rail access. It has an annual capacity of 15 million tons.
John, I was reading that SunCoke delivered record second quarter results.
Yes, you read correct. In early August, SunCoke announced record results for the second quarter ended June 30th. Total revenue increased slightly more than 32% year over year to $534.4 million. Net income was up 2.5% at $20.4 million or 24 cents per share. Meanwhile, adjusted EBITDA grew 2.7% year over year to $74 million. Now, thanks to strong both first half performance and volatile commodity market conditions, management expects SunCoke to report full year results at the high end of its 2023 consolidated adjusted EBITDA guidance range of around $250 million to $265 million. And operating cash flow is projected to be between $200 million and $215 million.
And its quarterly payout jumped 25%. Did I read that correctly?
You did. On the heels of record second quarter results, SunCoke Energy's board approved a 25% increase in its quarterly dividend from 8 cents per share to 10 cents per share, or 40 cents on an annual basis, for a yield of 4.40%. And that dividend is more than safe, with a payout ratio of just 30.1%. And that's well below the 90% threshold we can stomach. This gives the company more than enough financial room to not just pay a dividend should the markets unexpectedly turn, but also raise the payout should industry demand remain robust. And now it can both afford to and has a history of doing so. Since the start of 2022, SunCoke has actually raised its quarterly dividend twice, from 6 cents to 8 cents, and as we said, this past August to 10 cents per share.
Let's also talk about SXC shares. How have they been doing recently?
Well, a growing high-yield dividend is great. Of course, it's even better when it's attached to a market-thumping stock. As of this recording, SunCoke Energy Inc. stock is up 10% over the last month alone, 20% over the last 3 months, and actually 35% year over year. Big moves, but even bigger gains with SXC Stock is expected. Over the next 12 months, even conservative Wall Street analysts have provided a median target of 11 cents.
John, thank you so much for your analysis. Just to recap, SunCoke Energy Inc., traded on New York Stock Exchange under symbol SXC, is a great energy play operating in the industry with excellent long-term tailwinds. Thanks to surging global steel demand, the focus is back on coking coal, and SunCoke Energy is reaping the benefits. The company reported record second quarter results and expects full year results to be on the high end of its consolidated adjusted EBITDA range. On top of that, the company's board approved a 25% increase in its quarterly dividends. Finally, SunCoke stock is up 35% year over year. Despite the big moves, it could potentially have another 21% upside according to Wall Street analysts. That's it for today. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.